Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stockminer, Brian Johnson, making professional trading simple. And we had, the FOMC spoke today. I watched a little bit. I don't watch much news, but I did watch the Geithner talks. I always love to watch Geithner talk because he's a penultimate politician. He never seems to answer any actual questions. He dodges them and dodges them for about 5 minutes, and then they have to move on to the next guy. And that's kind of what we saw today. Some of them tried to get him to answer questions, and he did a little bit. I was real interested in what he had to say on Goldman Sachs. That was a big laugher for me. But interesting stuff going on in the markets. And still finished kind of flat. Again, you can see from the movement we had a good push down right towards this really heavier level of 10,100, which I mentioned on the Dow, and or 1085 on the S&P, and we'll get to that in a second, with a big push up towards the end of the day. So this might be a little bit of the bigger bounce. Maybe now I'm a little bit more convinced that we might have seen a 1, 2, 3. I think 3 might have ended down here actually, and then this was a 4, and then this might be 5 down here. Still no confirmation yet on that. Waiting for it to get back up above 10,300 before I'm a little bit more convinced of a larger bounce in the making. But I certainly believe that this could be it. This could be this wave 2 or whatever you want to call it. For right now, it's just a bounce, and we want to be cautious about where it goes. And we really want to start watching our charts closely now, because you'll have some people saying this is going to roll over and crash to Armageddon. Some people are very bullish on the markets, and they think this is just another one of the slap the bears pause type of a moment. I can actually see both sides. I am still neutral to bearish on the markets, but I see both sides. I'm objective enough to see the evidence for both sides of this. We do not know if one or the other is going to happen yet till we start to get back up into these higher levels from a bullish view. If you want to stay bullish on the markets, or to turn me from neutral to bullish, I'm going to need to see it get way back up in this area here to start to get me thinking about that way. So for the time being, I will remain neutral to bearish and consider this action we saw at the end of the day a bounce. Let me see if we can move on here. All right, here we go. You can see the big move down from last week, 2 moves sideways, and now this one little tail down here. We talked about maybe bouncing below this area, coming up to leave a hammer. I don't know if I'd necessarily call this a hammer candle today, but it still is another potential reversal candle. Looking for myself, I need a break above 10,300 to maybe get a little bit more bullish, at least in the short term, on these particular markets. Moving on, let's just look right at the Nasdaq 60 minutes. Still, all of these indices doing nothing but moving sideways here. Still waiting for a bigger push, one direction or another. For me, it'd be above this 1830 or 1840 area on the Nasdaq. So yeah, break above 1840 is what we're looking at there. Nasdaq on a daily. Scoot forward here, and you can see the move down, pulling back right to overhead resistance and the 50-day moving average. This is something to really keep on your sights too if you want to maybe get in for a couple of days of movement. Above the 1830-ish area, as I said, would be a defensible place. You'll want to put a stop right back below that 50 just in case we fall backwards. It might take it a couple tries to get up and over it. But that's where I would go. My first target, or my second, my first target's going to be right up here at the 20-day moving average and or this blue trend line. Maybe a retest of that for the NASDAQ. From a weekly standpoint, it's only Wednesday, so I'm not going to worry about it too much at this point. SPX on a 60-minute, you can see the drop down. Still looks like a pretty good 1, 2, 3... I think 3 ended here. This was maybe 4. This is probably 5 to the bottom. Anyway, point being, we hit the 1085 mark, which I had been talking about to all of you. We did break it ever so slightly today. If you guys took a short on it, I hope you have a very tight stop on it. I'd be very careful. We get up and over 1100. I certainly wouldn't want to be holding at that point. I wouldn't even want to be holding short at this point at the 1097 area. I hope you guys kept a tight stop on it. For my subscribers, once again, I sent them out an email telling them precisely that. Right before the Fed talked, I said, I don't like this down here. If you decide to go short below 1085, put a very tight stop on it because I wasn't convinced it was going to hold this first try. Maybe the next time we come back down and revisit it, maybe we'll see a more firm break of it. But right now, just I didn't think the markets just didn't feel like it was going to happen today. So here we are. I think this might be a little bit larger bounce. We did close up and above the 20 period moving average on the 60-minute chart, which I was watching, but any move up and over 1105 could also be a good entry if you haven't if you wanted to take a real short-term long position here. And I would tell you, I'd be very careful on this bounce. Keep your stops tight. Don't let your winners turn around and blast down below these 1085 mark, and then all of a sudden you're underwater on a bunch of stuff. Just be very careful on this move back up again. SPX on a daily doing the same thing here. Here's that 1085 mark. We saw the tail leading below it. This still moving sideways. Action overall for the SPX is sideways on a daily, looking for a break back up and over this 11, like I said, 1103, 1105 area. Then I'd start to look at obviously 1115 and 1130. Those are my two overhead areas I'm going to be watching very closely on this bounce. So if you're going to play the bounce up, remember you don't have a lot of room here, but still playable. You want to keep your stops tight. Don't get killed on this. And make sure you set stops too. From a weekly, we are still holding the 20-week moving average. That would make sense to me, but it is only Wednesday, so let's see where we close. But it would make good sense to me to see us maybe move back up into the end of the week now and hold this 20-week moving average since it's the first test of it. VIX on a daily, moving back down here, coming back down into some lower levels. If you had some options, you may have seen some increased. If you had some put options, and you're still holding them, you may have seen some heavier drops in your option price because of the VIX coming back down to these lower levels. On a weekly, holding right here at these heavier levels of support. We'll see where this closes for the week, but I wouldn't be surprised to see it maybe back down here a little bit again, because I do think that this might be, quote-unquote, the bounce. Might be a bigger bounce than what we had seen the other day. Apple on a 60-minute, finishing up almost $2 today, but still look at this choppy action. If you're going to play Apple, play it in